next going to be looking at income recognition. And again, like the fixed asset, this is particularly related to those who are counting under accrual accounting with the SORP. But if you are cash accounting and you know your cash accounting, like we've said, be aware of the threshold. If you're getting close to it, it's good to know what it's like to do accrual accounting. So income recognition, charity income is can be challenging when you are using accrual accounting, because it's not just the classic matching principle, and it's not just based on when the cash is paid in or when the invoices are raised. Instead, on the next slide, the income recognition criteria on the SORP, the Statement of Recommended Practice for accrual accounting, is slightly different. So income is recognised when you are entitled to it, when the entitlement has passed, when it is more probable than it's not that you will receive that income, and when it's reliably measured. That might seem quite complicated to you, that you're not just recognising income when it comes into your bank account, but actually there are some criteria that needs to be met. So we're going to ask another question now, and we've got some scenarios, and we just want you to think about that entitlement, probability, and measurability, and just see whether you think these scenarios, whether you would recognise that income. If you'd recognise it, can't be recognised, is it in the year or the following year?
That's it. The context is you'll see this on your phones, is that the context is your year end is the 31st December 2024.
That's right, yeah.
And you've got three options: can't recognise this year, recognise next year.
Yeah.
And there are three scenarios.
So the first scenario is if your charity has been informed of a legacy donation, and 10% of the proceeds of the will be yours, but the best estimate of that income is so far at £45,000. But the executor of the will has not yet gained the value of the estate. So do you think it can't be recognised, it'll be recognised in that year, or it'll be recognised the following year? The second one is you have received a confirmation in December 24 that your charity has received a £10,000 unrestricted grant. Brilliant. But the grant was only received in January 25. Can it be recognised? Is it recognised in the year of in December 24, or should it be recognised the following year in January 25? And we're going to go through the answers to these as well. And then the third scenario is in 2024, the charity has received income of £32,000 for a conference, and it's conference tickets, and the conference is being held in March 25, but you've received income for people buying the tickets ahead of the conference. If the conference didn't go ahead, the tickets would be refunded. So this is the legacy donation, at 10% of the proceeds of the will, estimated at £45,000, but the solicitor hasn't yet got a full valuation. So most people have said there that you can't recognise it. Okay, that's great. Yeah. Next is £10,000 grant, which is confirmed in December 24, but it's not been given. It's not received into your bank until January 25. And most people have said, yes, you would recognise that in 24. Okay, great. And then the last one is charity the tickets for a conference. And you've received the money in 2024, but the conference is actually held in 25. And most people have said that you would recognise income in 25. That's really helpful. So how have you done? So this is always a really interesting different scenarios that we have to talk through, and we to them against those three criteria. Are we entitled? Is it probable? And is it measurable? First one is about entitlement. No, it's about measurability.
That's all.
So the legacy donation, you are entitled to it because the will has been released. You know that you're entitled to 10% of the proceeds of the will. However, it isn't estimated until the value of the estate is confirmed by the executor of the will, at which point it is measurable. And so until it is measurable, it can't be recognised. The second one is about entitlement. And you received a confirmation that you've got a grant coming in of £10,000. At that point, when you receive that grant offer, you are entitled to that grant. And so entitlement has passed. It's measurable because you have the amounts there, and it's probable that you will receive that grant. So it ticks all the criteria, and you will recognise that income in December 24 before the end of that financial year. And the last one, we have ticket sales, and the ticket sales of £32,000. You've seen the ticket sales come in, but the event hasn't happened yet. The event happens the next year. So your entitlement hasn't yet passed because the date of the conference hasn't yet passed. So actually we recognise that in 2025. So hopefully those examples and those scenarios help us think through how income is recognised differently in cash accounting, where we see it just as it comes into the bank, and SORP accounting or accrual accounting, where we're meeting these different criteria of entitlement, probability and measurability. Then we also have multi-year grants, which are a little bit more complicated. The key thing to understand is when entitlement is passed for the next instalment of the grant, careful consideration is needed around the reporting requirements and the terms and the conditions of the grant when considering the entitlement to the different years of the grant being passed. So this can have a huge implication for some charities where thresholds for audit or for large charity requirements, they may, if you have a multi-year grant and you are entitled to more than just that year, and you're seeing that come into this year's accounts, you may go over a threshold, which means that you are required to produce more information in your accounts because you're a larger charity, or you might go over the audit threshold. So it is really important to get the multi-grants correct, but also the key thing is to supply as much information as you can about these grants to your accountant and discuss with them how it's going to be recognised in your year's accounts. The other thing that also affects income, and Tim has already mentioned an example, is donated goods and services. If you do receive donated goods and services, they may be recognised in your accounts, and they will be recognised as income of the value of that donated good or the service that you may have paid for. This doesn't include donated goods which are distributed to beneficiaries, because but they will be seen as stock on your accounts. But it's another thing just to flag up when you're considering your income and those income thresholds. If you have maybe you rent office premises, and that they have decided to give that to you as a free service, that you'll get free rental, suddenly that does need to be recognised in your accounts, and so your income is increased due to recognising that as an income.